Welcome back to the Value Investors Club. I'm your host, Simon Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have DigitalBridge Group Inc., DBRG. Price at the point of filing was $12.43. This is not recommendation, not advice, only entertainment. Please do your own diligence before investing into anything. Description. We first wrote up DigitalBridge in November 2020, back when it was Colony Capital CLNY. While now dated, the write up contains a detailed overview of the company, history, and its transformation process under CEO Mark Ganzi. DigitalBridge held an investor day on June 2021, which is worth reviewing, as well as the latest corporate overview IR presentation October 2022. Please note that since then, there has been a 4-to-1 reverse stock split, and the company has dropped its REIT status as it moved to become a pure play alternative asset manager focused exclusively on the digital infrastructure space: cell towers, data centers, small cells, and fiber. DigitalBridge officially has changed its name in June 2021 and has largely completed its transformation into a digital infrastructure investment firm. Nearly all legacy assets have been sold off, save for a few OED assets and their remaining equity stake in CLNC. Tom Barrack, a Colony founder, and nearly all legacy board directors are gone. The stock roughly doubled from the time of our first write up, but has given it all back since reaching a 52-week high of $34 at the end of last year. Rising rates have impacted the broader fundraising environment as well as multiples in the alternative asset manager in digital infrastructure spaces. And since DBRG is still in transition, it is expecting a significant step up in earnings in 2023 following the launch of several new funds, including its third flagship fund, DBP Third. In our view, the market is now pricing in zero success in fundraising and zero credit towards a carried interest. The stock has reached an incredible dislocated level, which we believe can rapidly correct upon the announcement of successful new fund launches. The company cannot discuss its fundraising efforts publicly until it chooses to announce a first or final close. As such, public shareholders are essentially left in a holding pattern, simply waiting to hear of a big announcement. And once this happens, we believe DBRG shares can roughly triple from current levels. For a number of reasons, we believe DBRG will be successful in raising its new funds and exceeding its fundraising targets implied in their 2023 guidance. The CEO and other insiders started buying stock recently, the first insider trading we've seen since he took the helm. The company is on track to exceed its fundraising goals for 2022 and plan to finalize the launch of their new core and credit funds in Q4 2022. The company is on track to exceed its fundraising goals for 2022 and plan to finalize the launch of their new core and credit funds in Q4 2022. DBT second is fully deployed, and they need to raise DBP third ASAP, and that process likely kicked off earlier this year once DBP second reached 70 to 80% deployed. It is now 90% deployed, and this means DigitalBridge won't be able to acquire more platform assets for its portfolio without affecting the next for its. I'm sorry. Um, won't be able to acquire more platform assets for its portfolio without the next fund or co-investment capital. DigitalBridge has the unique opportunity to not only buy but build instead of needing to find scaled companies to purchase. They can simply deploy more capital into existing portfolio companies that can build more towers, data centers, etc. from the ground up. This activity in 2022 is nearly 8 billion of capital investment into projects on 5 continents. As such, the opportunity to deploy capital into digital infrastructure is both enormous and secular. We do not believe DBRG's fundraising efforts will be weighed down with the rest of the private equity industry. DBRG is the fastest growing alternative asset manager out there. We do not expect that to change anytime soon. And across the industry, infrastructure has been a key growth engine for alternative asset managers. Simply listen to KKR, Blackstone, etc. They are all raising significant capital for infrastructure investments. Here's the high level math on why we believe DBRG has been oversold and can roughly triple from here. Page numbers references DBRG's latest corporate overview. There are two segments: digital investment management, IM, and digital operating, DO. Digital IM is the main focus. This is an alt asset manager that has raised PE, credit, etc. funds to invest in digital infrastructure. Typical management fee, performance fee business model. DO is essentially two data center companies they own directly on the balance sheet. DBRG is selling off their stake in one of the companies, Databank, to LPs that are moving their ownership into DBRG managed vehicle that can generate fee income for the company. Based on the CEO's recent commentary, once that process is fully done, they will likely do something similar for the other data center company, Vantage SDC. Once this process is complete, DO will cease to exist and they'll become a pure play IM company, which should simplify the story. For now, the right framework is SOTP of the two segments, plus leftover items on the balance sheet. See page 25 of company presentation. Digital IM value. Digital IM 2023 EFRE guidance is 175 to 195 million. This is conservative as fee earning equity under management FEEUM is guided to $38 billion midpoint next year, up from $25 billion this year. The main FEEUM jump will be the four new funds they're about to launch. DBP Third, a third flagship PE fund, which should be $10 to $14 billion, and New Credit, Core, and Ventures Fund appear to have already launched per management commentary yet to be publicly announced. Assuming blended management fee of 90 basis points, they are at 1% across the platform now. This would imply 222 million FRE on 38 billion FEEUM. And assuming a 65% FRE margin, well above their guidance, incremental FRE margin, well above their guidance. Incremental FRE margin is 70% and the segment is already close to 65. Using EV/FRE of 2020x and equals a 4.9 billion value. If they maintain 1% blended management fee and not witness a dilution to 90 basis points, then FRE should be 240 million plus. DO value. See page 21. 1.1 billion is a decent proxy. Digital IM, carried interest value. Our own estimate values this at 1 billion plus, but questionable whether the public markets will ever give them or any alt asset manager credit for carried interest. Rest of balance sheet net debt. See page 26. This basically nets out to zero. FDS run about 190 million shares. Digital IM of 4.9 billion plus DO of 1.1 billion equals 6 billion value divided by 190 million shares, $32 stock price, excluding carried interest value versus $13 today. Carried interest on top is another $5 a share. Doing the same math a couple of years out on 2025 figures will get you to the 45 to 50 plus dollar range. Most importantly, as CEO Mark Ganzi will receive a $100 million payout if the stock reached $40 by mid-2024. The man is motivated, and the big earnings driver will be the launch of DBP Third sometime in 2023. However, if the stock is nowhere near $40 by the end of next year, we believe DigitalBridge should consider selling itself to a large alternative asset management platform. Blackstone, KKR, Brookfield, Asset Management, EQT, and Macquarie are all large enough buyers and should be interested in this unique industry specialist. There's significant revenue, capital raising, and cost synergies, G&A, in asset management, MA. Plus, one of these acquirers should finally give DBRG credit for its carried interest in case the public market does not. Catalyst. Raise DBP third new flagship fund, expected $10 billion to $14 billion fund, 2023. Continued buybacks with excess cash flow. Continue to pure play a digital IM platform will simplify the story. Sell to a larger alternative asset management platform. Blackstone, KKR, Brookfield Asset Management, EQT, Macquarie are all large enough buyers and should be interested in this unique industry specialist. Thank you very much for tuning in. See you next